Good morning. It is Masters Week, Thursday, April 11th. It is gray here in Atlanta. I hope it's a little bit sunnier down in Augusta. I will be watching all day. If you're interested, if you're going to be sitting in front of your TV watching the Masters all week, why not invest? I told you I went to Top Golf. Oh my God. If you're interested, comment down below if you want me to put the picture of me at Top Golf. My swing is impeccable. Impeccable. I used to be a really good golfer. I don't golf that much anymore. If you know anything about golf, you have to play in order to be good at it. Once you start losing it, you start losing your touch, blah, blah, blah. Golfing stocks. At Cushnet Holdings, that's the owner of Titleist. Callaway Brands. Those are things. Sporting, Nike, Dick's Sporting Goods, Under Armour, all stuff. Gaming casinos, DraftKings, Penn, Las Vegas Sands. These are all ideas that Seeking Alpha brings out to you and says, hey, you can buy these if you golf. I'm big on investing in what you know. So golf, there's an article for that. I wanted to go over Alpha Picks. I started reading their returns yesterday. This is interesting. So since inception, Alpha Picks is up 128% versus their benchmark, which is the S&P, is up 37%. In 1 year, Alpha Picks is up 98%, the benchmark 26%. In 6 months, Alpha Picks is up 57%, the benchmark is up 20%. 3 months, Alpha Pick 31%, benchmark 9%. You get to the 1 month and then Alpha Picks starts to break down. But overall, for the month of March, they beat the benchmark. So I don't know why anybody doesn't sign up for Alpha Picks. Maybe you can tell me. Maybe it's the cost. It's $50 off, $449. I do think that this is worth it just based on the performance. I just showed you how it was performing. So I think that one's good. The other thing that I can't understand why people don't sign up is Visible. My link, both of these links, by the way, are right here on Linktree, LINK. Visible. They just promoted they added to their plans. You get $20 off when you sign up through my link. So $20, and there's 2 plans. I have the $25 plan. It is perfectly fine for me. If you have a watch, an Apple Watch, it's included in the $45 plan now. That's crazy. That is just nuts. For $45, you can add a watch and a phone. That's unbelievable. Unlimited use of your phone as Wi-Fi. That's huge. And if you're international traveling, they allow you to get 1 pass per month of global. So say you go over to London for a day. Well, there you go. Global pass. It's included in $45 a month. So if you want Visible, go to my link tree. It is down there. It is just down at the bottom. The top one is Trendspider. The second one is Seeking Alpha Premium. We'll go over the benefits of that stuff. But there's a couple of things. Again, this page is meant to save you money. So that's essentially my pick. Again, Alpha Picks is just great. Seeking Alpha. Speaking of Seeking Alpha Premium. Top picks. We talked about energy and utilities as Q1 approaches. Energy is my biggest one. Kinder Morgan knocks the top spot with a score of 4.28 out of 5. You can read this analysis. Fang, which is Diamondback, secured the runner-up position. Fang has been on an absolute tear. We'll go and look at Fang before we look at the Qs because I do want to talk about yesterday's action in the Qs. But here's Fang. In Fang, the algorithm makes you 41%. Buying and holding this one makes you 52%. Look at this run in this stock with the algorithm getting you in under the 200-day at 153, almost timing the bottom, not quite. But in 61 days, you're up 36%. That is crazy. Does it have more room to run? Well, the quant thinks so. This one, if you look at the weekly, we've just gotten above the 50-day. Not too far. You're at all-time highs. But again, if the price of oil continues to go up and the price of energy continues to go up, this is a really, really good one. Quant's picks for utilities. Atmos Energy comes in first. Next Era Energy comes in second. First Energy comes in third. This is a great article to read. This is one of the reasons why Seeking Alpha Premium is so good. Again, sign up from at the link tree that's down below. Now let's talk about the Qs and let's talk about yesterday. Yesterday's issue was that CPI went up hotter than expected, which means that we have higher for longer interest rates. What did that do? Well, I saw Jeremy Siegel on CNBC this morning. He's a great economist, a professor at Wharton. He's great. He read word for word from the release yesterday that rent and insurance were close to 65% of the total numbers of inflation. That means, but rent and insurance are lagging 12-month numbers. That means inflation isn't as bad as expected. It means that the economy is still strong because jobs are still strong. So what happened this morning? Well, PPI came out. It didn't open up. Let me see. Seeking Alpha. We're going to look at the PPI data. Oh, I hate when this does this. I'm having problems with my links and stuff. So if stuff doesn't open up, just know it's just the link. But PPI came out. PPI index rose 0.2% in March, which is less than the 0.3 expected. So the cost of these goods actually went down. The cost didn't go down. The cost still goes up. Just it slowed down. The acceleration and the inflation went down. So the cost of goods went down. The consumer, the price that the consumer is paying went up, supposedly. But Jeremy Siegel's point was that these numbers are trailing 12 months. So then the other thing that I heard was, what's the Fed going to do? Are they going to delay it until July? Are they going to delay it until it gets to October? The problem that you have is the Fed wants to avoid any type of political bias. And so I think you're going to see at least 2 rate cuts this year. And I think it's either June or July. And then I think you're going to see December. I don't think they cut in August, September, October before the election. And November, I think their meeting is after the election. But I don't think that they will do anything political to boost this stock market. And they want to stay away from that. If the stock market's going to fly based on cutting interest rates, then what they want to do is they want to push that out or forward. So I think you're going to see June or July. And again, this market, if for some reason inflation is still sticky, you're screwed. The market's going to go down, but it still presents a buying opportunity. We talked about the Qs yesterday, about this 440.83. Guess where it's trading right now? 440. Guess where it went down to yesterday? The low was 436. 436, it looks like the low. 436.39, 436.28, 436. This 430 is going to provide you some support, but you should be buying in this area. Again, with PPI coming in cooler, you can read this article. I think we look at it very well. Now, Seeking Alpha app, again, this is part of the greatest thing. I like waking up in the morning and looking at stock gainers and losers. The app is great to just scroll through. No ads. It is unbelievable. So if you want access to Seeking Alpha, use my link in the link tree. Oh, there's producer price index. Cooled off. Here's the thing. And I want to point this out. Bonds are trading like rate hikes are coming. Hikes aren't coming. Gold is trading like rate cuts are coming. They are coming. Stocks are trading like a soft landing is gone. Soft landing is still in play. The jobs market is good. Oil prices are trading like the Fed is trying to avoid a recession. They are trying to avoid a recession, but energy is just in a supply-demand squeeze. And housing prices are rising like interest rates are at 3%. Again, housing, ITB went down yesterday. I think it's an opportunity. Nothing adds up as far as this goes. Let's look at yesterday's winners and losers. Yesterday's Dow losers: Home Depot, Goldman Sachs, Intel, Nike, United Health. These are stocks that you want to buy on the pullback. Disney, Salesforce, JP Morgan, Coca-Cola, Honeywell. These are stocks you want to buy on the pullback. This is not something that you want to take and just throw your entire portfolio at. But on the pullback, these stocks have shown that they can move up when the rate cuts come. These are the stocks you want to own when that comes. The other stock that you want to own is IWM. And we can go over IWM in a later episode. I don't have it covered in this one, but only 2 Dow gainers yesterday. Walmart and Chevron. I said Walmart is a buy under 60. I still think it's a buy under 60. Chevron is just one of those that you can buy. We looked at the top energy stocks of FANG, in the quant. Just add energy to your portfolio. The NASDAQ gainers for yesterday, NVIDIA was up. I heard somebody saying, well, with rates going to go up, value is going to outperform. NVIDIA is not a value stock. Costco's not a value stock. Atlassian is not a value stock. CrowdStrike, certainly not a value stock. Meta, not a value stock. Palo Alto Networks. These are all the gainers for yesterday, not value stocks. These are growth stocks. You look at the NASDAQ losers yesterday. Oh, there's some value in here. Moderna, down 3.8%. Old Dominion Freight, that's one you buy on a pullback. Sirius Holdings, I don't think Sirius Holdings, I don't like that one. Intuit, Tesla we've talked about. Intel, I think Intel's a fine company. I think they have I am in that one long. On Semiconductor, they had a cross up. We can go over that chart in a little bit. Costco, we talked about Costco selling gold bars yesterday. They raised their dividend by 13.7%. I'm in at Costco at $730, I believe. Yeah, it's trading at It's a 1.03%. Did I time it? No, I didn't time it. 713 was the buy. I don't know if I got in at 713. I think I got in at 730 because I wanted to try and time it. I didn't time it very well, but looks like we have confirmation at 713. I think you've got 800 in here if they raise the membership price. Look at this. They raised the dividend by 13.7%. That's, the dividend is not 13.7%. It's actually 0.64%. So it's less than 1%, but they raised it to $1.16 from $1.02. That's great. You want to see even better? Look at this. Costco March net sales up 9.4% year over year. That's a bullish signal. If they're selling more, again, where's the consumer going? They're going to Costco and they're going to Walmart. That's huge. That's amazing. Vertex Pharmaceuticals bought Alpine, ALPN. I wanted to look at this stock because ALPN, between yesterday during the day when it was rumored that they were getting bought, and then today, pre-market, you are up. Let's see. This is a $64 stock. Yesterday, this was trading at 37. It's a $64 stock. It's crazy. Now, is it worth it? Take a look at this one. They're going to buy for $65 a share. I would wait for this. And if it pulls back, ALPN, if this one pulls back to the $60 or even $59, you got 10% in there. If there's any rumor that this isn't going to go through, you got your 10%. So keep an eye on that. If you want to trade this one, it's Vertex Pharmaceuticals is going to buy Alpine, ALPN. Keep an eye on ALPN. I don't know when the transaction is anticipated to close later this quarter. So it could be really quick. Could be super quick. Rent the Runway. This went crazy yesterday. Rally says Q4 loss narrows, revenue beats expectations. We can look at rent. This is not one you buy. In my mind, I think it's a short squeeze. I'm pretty sure this one is going to come crashing down at some point in time. It is up 33%. Again, yesterday or just a couple of days ago, you could have bought this at $5. This is trading almost at $10 today. It had a reverse split. This is not making money. Again, the narrow losses. But if we go and look at the short squeeze on this one, we can look at rent. Short float 23%. 23 of the 1.5 million shares floated are short. Now, its 52-week range is crazy, $4.46 to $69.20. This one could run on a short squeeze. If you're willing to trade it, I would trade it on a short time frame. It's going to provide you some volatility in order to trade. Amazon CEO Andy Jassy talks up AI potential cost-cutting focus in his annual shareholder letter. We've talked about it. This weekend in my paid newsletter, I went over everything I think about Amazon. right here in the paid newsletter, Finding Stocks in This Choppy Market. The focus at the end was Amazon. So all you paid newsletter subscribers, go and read about Amazon. Go and read how I think you should be buying Amazon, where you should be buying Amazon, why I think it's an opportunity, and where I would try and pull back from this. But again, look at this weekly. The weekly chart clearly shows we have an opportunity to buy this one before their earnings. Their earnings are coming up April 22nd, 11 days. This is a huge, huge opportunity in my mind. And again, if they're cost cutting, I think you've got an opportunity. Now, let's talk about the home builders. Yesterday, the home builders went crazy down. They were down like 6%, 7%. ITB is trading at 106. This is down 0.13. Let me see. I will tell you where I bought ITB at. I think it was about 110. Let's see. ITB, I didn't buy a ton of it, but BLDR, which is one of our social requests, which is coming up in a little bit, was one that I got into. And I wanted to broaden out my stuff. ITB, I bought 50 shares of this in a brokerage account. And again, I bought those 50 shares. Average cost $113. I'm going to add more at 106. I'm going to add more. Here's my thought on home builders, and specifically BLDR and things of that sort. But home builders in particular, home builders have an advantage over existing sales houses. They can bring your interest rates down. For anybody that's bought a new home, if you buy it from one of these large home builders, what they do is they give you points off your mortgage if you finance through one of their lenders. And they're able to get you down to an average between 4 and 5%. Even though 30-year rates are at like 7% right now, they're able to do that. This was just some profit taking. Look at this 4-hour chart. This is profit taking. This is nothing more than profit taking. Look here back in October and November how it dipped down to 72. This is going to go to all-time highs. If you want to know what's in the ITB, and you want to buy some individual stocks of the ITB, go to Seeking Alpha. Look, the momentum's A+. The expenses B-. But this is one I think is an opportunity. You look at the holdings of this one. The number 9 holding, 3.15%, Builders Trust, Toll Brothers. The number 1 holding is DR Horton. And if we look at DR Horton was down, I think about 6% yesterday. All of these were down yesterday, 6.39. It's up 0.43%. ITB is going to be an opportunity for an ETF that I think you'll be fine. With rates coming down, this one should continue to go up. Again, the anticipatory rate anticipatory event of rates coming down, this one should go up. This one is like IWM, which is the small to medium cap. But I like this one. I really, really like this one. So we can look at Roblox. I said yesterday, and I'll say it again. Roblox got a partnership with Pubmatic, PUBM. This is in the quant. It is a sell. I do not suggest holding Roblox. I suggest trading Roblox. It is in the core portfolio. It bumped over 40 yesterday. It's going to bump over 40 again today. It's up 0.33. It's at 39.93. If you want to make some money, buy this one under 40. It is just below the 200-day. That 200-day is going to provide some resistance, but that 50-day is starting to turn positive. These guys have somewhere in the neighborhood of 71 million daily users. What they're going to do is they struck a deal with Pubmatic to put ads. I think one of the biggest growing things in Amazon is going to be ads. Roblox is exploring doing ads. If they wind up getting ads, Roblox all of a sudden becomes a positive cash flow business. They're losing $1.15 billion. So they're losing a ton of money. Their sales, $2.8 billion. They've got plenty of cash on hand. Do not worry. They are not getting diluted. They may get diluted. I mean, you never know. They may start to raise cash as the price goes up of the stock, but I think they've got plenty. The short, there's only 4% short. You're 16% below your 52-week high. Average target price, $49.52. Take that with a little grain of salt. But these guys, look at everything in this year. has come out at 55, 46, 48. Roblox, great trade. Get it under 40. Great trade. I think this is one, you put a couple $100 into this one. If it goes over 40, you can sell it. Again, try and find ones that are safe to buy. One that I want to show you is, here, we're going to go over here. We're going to go to the private Facebook group because I posted yesterday in the private Facebook group about Wells Fargo. And Wells Fargo has earnings coming up on Friday. And what's interesting about this one, I do own this one. Full disclosure, I do own this. What's interesting about Wells Fargo is the seasonality. And the seasonality, Wells Fargo has to happen the highest average return rate in the month of April, 0.321%. Over the last 50 years, I own Wells Fargo. I like Wells Fargo. I was screaming that people should be buying Wells Fargo under 40 for the longest time, sitting there holding it. I said, under 40, you buy this stock. Absolutely, you buy this stock. Algorithm just got you out with a 1.33% loss. Don't get out of it. Their earnings are coming up on Friday. Look at that MACD down here. Now, I do think they have problems. I think this is a stock on the rebound. If we take a look at the weekly on this one, we have a positive moving 50-day, a positive moving 200-day. You're not at all-time highs. Your all-time highs are back here at 65, 66. I think it's a 65, $66 stock. I think you cover this gap. Do you cover in this earnings? Probably not. But you look at how hot this stock has run on the weekly. I think you get this one because in the month of April, the seasonality is really, really good. If we look at a weekly seasonality, I'll just change this to weekly, week of the year. Let's take a look at this for the last 19 years. This week is up, let's see, average mean change for the last 19 years, 1.19%, 50%, so it's a coin toss. Next week, 0.87%, but you're winning 68% of the time. So if you want to earn 1%, maybe you just buy it before its earnings. 68% chance they're positive. Again, for the last 19 years, you can look at that one. These are the tools that you can use in Trendspider. I really like this stuff. Seasonality. Deck was one of the biggest losers yesterday. This is Decker's Shoes and Decker's Outdoor Company. What should you buy on the pullback? I don't know. I mean, we can look at it in the quant, but look at how quickly it pulled back to the 200-day. It pulled back all the way from $931 to $810. Boy, don't you wish you would have understood that this gap that was created on earnings probably gets filled? If you like this brand, what it was pulled back for is because there was a report that the sneaker brand Hoka, which they own, there was some weakness on it. If we look at Deck, I believe it's a strong buy in the quant. It's a hold in the quant. And the reason is the valuation. This was a strong buy in the quant. Let's see when it was a strong buy. It was a strong buy. It was a strong buy back on 3/14 at $933. Strong buy back there. It was also a strong buy back here at 576. So the quant works. I do think that you probably want to look at a chart of this one on a 4-hour. Algorithm got you out with a 29% gain. Boy, don't you wish you would have listened to the algorithm on this? Algorithm makes you 117%. If you bought and held for 2 years, you're up 204%. Who could have known that? Again, the algorithm provides you some safety. So you take a look at this. The MACD is way, way down. I would not be buying this one, even though it looks like we're down a little bit. The valuation, since the valuation is so bad, let's look at the D- valuation. Look at the PEG, 1.57 industry sector, 1.51. It is ranked number 1 out of 9 in the, let's see, this is the shoe category. Is it consumer discretionary? I don't know. Oh, come on. Let's see. This is the Decker search results. Let's go back here and see which sector. Consumer discretionary, footwear. So it's ranked number 1 out of 9. Crocs is number 2. Nike is number 3. I'd say on. I mean, on. I continue to say if it's under 30, you buy on. On is trading right now at 32. It's going to get under that 30. It's going to get under that 30. You want to buy it under 30. Right now it's trading at 32.05. It's got a little bit, but you want to buy it up here and you want to sell it up here. That 32 may be providing you some support from a long-term perspective because look at this gap. That gap down, that might be providing you some support. So if you wear on shoes, I think you should actually look at this one. But yeah, this is a good sheet. It will be in the newsletter. It is a divergence cheat sheet. You want to basically bookmark this and understand this. When you're looking at lower lows, that's the bullish divergence, higher lows. Lower low is the bullish. Higher low is the bullish. I'm sorry. What does this say? Bullish. Oh, yeah. If you're seeing divergence in this, so if you're seeing one indicator seeing a lower low and you're seeing another indicator on the higher low, it's bullish. That's strong bullish. Weak bullish, lower lows, equal lows. Hidden bullish, higher lows, lower lows. You just don't know. Equal low, this is medium bullish where you're seeing that kind of stuff. This is what you want to do. Bookmark, save it for later. Again, you want to look at different time frames, different things. Bookmark it, save it for later. Read up on this one. Hood got downgraded, and I think it's interesting because again, this one has run quite a bit. It's 44% year to date climb, largely driven by crypto. And I think they also have that credit card, which they did a great job with influencers on. I think when this one pulls back, I think you want to buy this one. And I hate Robinhood, but if you want to trade this one, I think you buy it. And I think your support level is probably, let's see, the VWAP around here is around 13.32. So I think maybe around 14, you start adding to it. Again, I think they've shown that they're a $20 stock. They've shown during the time of pops in crypto and other things, they show that they're a $20 stock. I wanted to go over Shopify because Shopify just got downgraded to a buy from a strong buy here in the quant. I think it was, or it might be a hold. Yeah, it got downgraded from a strong buy to a buy. That's where it went. It's strong buy to a buy. Based on valuation, you can see the valuation a little bit nuts. The peg, the forward peg, which Steve Kress who wrote the algo, likes 1.34. I still say Shop is a buy under 80. I think Shop is a buy under 80. Global stock leaders enabling tech. You can read this. This is from UBS. These are stocks that they like to lead the tech sector. ASML, Baidu, AVGO, which I own, Meta, which I own, Microsoft, which I own, Oracle, I want to own, CRM, I own, Now, I want to own, Taiwan Semi, I want to own, TDK, I know nothing about, Uber, I own. So those are the top ones in there. Alpha picks top quant stocks in the energy sector. We went over this one earlier. FANG, ATO, I really like that one. This is the newsletter. So let's go down. Good suggestions from you. Top quant picks. There we go. Let's look at some of the, again, sign up for the newsletter. Why you're not signed up for the free newsletter? I mean, I got tens of thousands of people that listen to this podcast. If you've made it this far, I don't know why you're not signed up for the newsletter. It's free. It's free. Absolutely 100% free. Let's look at Tracy from Spotify. Wants me to look at ARM. The problem with ARM is it's a great stock. It just IPO'd. It does have it's 7 months ago, so you're sitting on 7 months. Over 7 months, the algorithm makes you 86% versus buying and holding made you 124%. This one ran up quite a bit. Your average win is 55%. Now understand, there are only 6 positions that it took. One of these positions is currently open at 133. You've got this gap here. And I pointed this out that this one ran like crazy, but you've got this gap on their earnings. Their earnings were unbelievable. The problem with ARM is the valuation. And we can go and we'll first look at the quant here. This is, just so you know, this is a stock that is a software. So every semiconductor that is produced pays them a licensing fee for the software that they use to put onto chips. And so people write software, blah, blah, blah. Most every chip writes it on ARM software. There's some competitors, but nobody's really come out as a competitor. So the quant doesn't cover it. Wall Street says it's a buy. The price target on Wall Street is 104. It's trading at 125. The problem that you have with ARM is the low float. And it's shares, shares outstanding 1.03. It's floated 1.02. But the problem is that I think 60% of this is owned by SoftBank. And you don't know if they've actually started selling or not, because there's no insider selling. Maybe next time they might disclose that they started selling. But you can see, look at these downgrades. Downgrades went from, they downgraded Daiwa back in February. They downgraded, but they upped the price target from 63 to 130. The average price target is 111. You're trading at 125. For me, it's too expensive. I think there's better places to put your money in the market. We talked about divergence. Look at how fast that one's coming down. Look at how fast that's coming down. And this one has gone up. So you had divergence here, but you've traded sideways. And your Bollinger Bands are expanding, but you have a confirmation on the low side. I would stay away from this, Tracy. I don't own this one. It's one that I do want to own, but I'm not willing to own this one just because it's kind of hype out there. Bisco, curious why you wouldn't pick AZEK over T-Rex. Number one as Seeking Alpha Quant versus 7 and similar market caps. They both make flooring materials. I don't know. I don't know why Bisco, I have no clue. I mean, AZEK, look at it. I mean, algorithm got you out. Algorithm makes you 56%. Buying and holding makes you 113%. In AZEK, we can look at T-Rex. I don't invest in either one of these. I don't have a position in either one of these, but they look like they're kind of trading on the same thing. If we look at T-Rex over here, and we look at the quant, it's a strong buy. T-Rex, number 7. I don't know why I picked it over AZEK. Let's see. If we go to AZEK and we go, let's do charting. Let's do peers. Let's do the peers, because the peers here would tell me, okay, where are we on price return, blah, blah, blah. And I'm going to edit to symbols, and we're going to take out ANON. We're going to take out PPI, SSID, and we're going to put in T-Rex. Let's just take a look. Why would I pick one over the other? Let's say T-Rex, compare. Boom, 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 boom. Both have enterprise value, pretty good, big size. Employees, this one has a bigger value with fewer employees, less cost. We can look at total return here. It's not going to chart. Okay, we'll have to look at what's going on there. We'll go and chart these in a little bit. Both strong buys, hold, buy. I mean, they have about the same rating. AZEK is 8 out of 639, 70 out of 639. Number one, I don't know why I'd pick one over the other. I mean, honest to God, I just, look at the performance, the PE gap forward. AZEK's 47, T-Rex is 41. T-Rex is actually cheaper with growth. Gross margin, T-Rex is better. EBITDA margin, better. Net income margin, better, almost 3 times. Leverage free cash flow, AZEK is a little bit better. I mean, it just looks T-Rex is probably doing better. Let's take a look at the charting of the two. Let's go T-Rex, and we will go AZEK. We'll do charting. I mean, I think it's just a coin flip, to be honest with you. Select symbols, but this is how you use Seeking Alpha, AZEK. And we'll do the two together. Let's see. How'd they do? Let's see. We'll start with 1 day. T-Rex up 1.96. AZEK underperforming. 5 day. Oh, come on. This is where it gets. Okay, there we go. 1 month. T-Rex underperforming AZEK. 6 month. T-Rex underperforming. Year to date. Oh, and then it stops. Yeah, I think my computer's messing up here. I got to probably delete some stuff. But AZEK overperforming by a little bit over 1 year. 3 year didn't come up. 5 year. Let's say 10 year. Let's do 10 year. You have AZEK that just has started. So I think it's just which one do you want? I think it's a coin toss. I don't know which one I would pick. I don't have a dog in the race there. Tristan, thank you for looking into my question. I'll try and ask better questions in the future. Tristan, if I get angry with you for picking a stock, don't think that I'm angry with you. I just, I'm an old man. BLM Twin wants me to look at BLDR. This is one that was a huge buy in the quant. I think I'm in at about this price, to be honest with you, about 187. And it's gone up. You got out with a nice 18% gain here. Algorithm makes you 112%. You've lost your 50-day. Your 50-day started to move negative. Right now you're up 0.39. 187. I mean, go over BLDR in Seeking Alpha. Let's look at this real quick. We'll go back to the summary. Look at BLDR. Still a strong buy in the quant. Valuation is not crazy. The problem is growth, and the growth is the issue. Revenue growth year over year, they're down 24%. They have tough comps to get ahead, because this was the time. If you look at BLDR and we go to a weekly and we go back to April of last year, April of 2023, let's see, April of 2023, the stock was trading for around $94. That's when it started to shoot up. And around $84, they have to continue growing in order to sustain that. Now, do I think there's a pullback coming? Do I think there's a 33% pullback coming? Probably not, but there is a pullback coming. This is a buying opportunity for this stock. It is not expensive. BLDR is not expensive. Look at the valuation. You look at the PE. They're under their peer, the sector median. You look at the gap, the forward gap. They're under their sector median. Again, this is number 3 out of 38 in industrials. AZEK is the number 1. I mean, whichever one you want. So BLDR is one that I will be adding to. It's not one that I will be selling. I will be adding to it. Remember, I am not trying to time this. I am not trying to look at this and say, oh my God, let me stay out of this 33% downturn. I am going to buy more. It is in a brokerage account. So I think I have some in my retirement account too. So I shouldn't say that I won't get out of a 33% downturn. I probably will, but I want to add more. This is a company that, when you take a look at BLDR, let's look at BLDR real quick. We'll look at BLDR against Home Depot, because Builders First provides building materials to new home builders. And let's look at the charting of this against Home Depot. Now, Home Depot, significantly larger company, significantly better dynamics on Home Depot, but these are kind of similar. Look at this, 1 year, BLDR up 104%. If we go 3 year, and it's doing it again. I got to restart my my browser to be able to do this stuff. But here you go. Look at 10 year. I mean, again, I think this one just has, if you look at the financials, they just have growth ahead of them. Trailing 12 months, revenue, $17,097. You look at the December 2023, December 2022, they were making more. So I think they have growth ahead of them. The problem that you have is you're going to have, whenever the home builders pull back, you're going to see BLDR pull back. And that run that you see on this weekly, it's going to pull back. So BLDR, I would wait for it. I would look at, when the algorithm winds up getting you back in, because it has gotten you out. It saved you from this huge downturn. Nice 2% loss, but it saved you from that downturn, that huge downturn. And it hasn't gotten you back in. It'll get you back in some point in time, not right now. But look at the divergence that we pointed out. This one was going down on the MACD, but it's going up on the stock. Boy, if you had noticed that, just say at the end of this, at 178, you're still in the money. You're still in the money. You could have gotten out with a nice gain here around 210, 212. You're still in the money. I think I bought some at 200, in one account. I'm just going to continue to add to it. I think it's a well-valued company that, again, has a buy on the strong buy on the quant. I think they're fine. Scans. There's nothing. I mean, there's one interesting chart that I noticed, and it's ELF. ELF came out with a buy in the algorithm down here. It crossed up 167.16. You're trading at 169. Do you have more room to run? Look at how low this MACD. Last time the MACD was down here, you were trading at 104. So the valuation on this one is a little bit crazy. If the consumer is still strong, this one should go back to 200s. It's a little bit of a, let's see, I think the valuation is the one where it gets dinged on it. On the quant here in Seeking Alpha. Yeah, valuation. It's an F. But look at the peg. It's 28% below its sector median. You go to your Ulta, which is one of their competitors, which is the largest in the beauty sector, and the peg 1.72. So I think ELF has opportunity to grow, continue to grow. I think let's look at the Wall Street target. Wall Street, you still have 22% upside, $208. If we go over here and we look at ELF and we look at how viable that $208 is, look, initiated coverage, 185. 208 comes back to, I don't even know where they got 208 back based on these numbers. Take it with a grain of salt. Insiders, they're selling at 206. Nothing crazy. I mean, the CEO sold at 198, $4 million worth. He sold, at 175, $6 million worth. He sold at much lower prices than this. So, I mean, again, I don't think there's anything other than the CEO's just trying to make money. So, if you have any questions, again, remember that everything's at the Linktree, linktr.ee/jelly stock pick. You got Trendspider, which is on a special. You save 63%, 74 to 40 a month. Sign up over there. Then you go back to the Linktree and you're going to email me. Email me with any questions that you have. And you're going to ask me. If you're not on the socials, just email me. Everybody's got email. Join Webull today. I still have to do my Webull stuff, but I will. Hold on one second. Potential spam. Oh, no. I got a call from somebody. Potential spam, though. I love Visible. Visible just upgraded their potential spam. I don't get phone calls from anybody. Political candidates, nope. Doctors, nope. Collection agencies, nope. Yeah. But Visible, great plan. Trendspider, you got Seeking Alpha Premium where you save an additional $50 off by using my link. Alpha Picks, you got everything. I mean, God, this market is ripe to buy. Let's see, indices check. I'll check my portfolio. Versus the index, I am up 0.39%. NASDAQ is up 0.39%. So I'm meeting it. Dow is down 0.06. I'm beating it. I'm beating the Dow. Again, I've got a base. I'm sitting there. Everything's good. Everything's good. I mean, you want to buy Bitcoin? Buy Bitcoin. I think it's going to 100,000. You want to buy Shopify? I think it's going back to 80. It's at 71. You're buying to buy Roblox? It's going to go up above 40 so you can make some money. Apple, I think that's a $250 stock. I think you're fine on it. Amazon, I think it's going to hit 200 some point in time this year. Boeing, we have some problems with Boeing. I wouldn't even touch it. It might come out of the core portfolio. Bank of America, this one's going to be a $40 stock at some point in time. Cleveland Cliffs, I think that one's a $25 to $30 stock. Costco, once they raise the price, it's going to be a $800 stock. Disney, I think you're fine in Disney. I think that one's going to 140 at some point in time. Google, it's 159. I told you to buy it under 150. Goldman Sachs, this one's going to go over 400. They have their earnings, I think, that tomorrow as well. Coke, 59. That one, it will get above 60 if you want to make a little bit of money. If you don't want to, you just hold it. You'll be fine. Lilly, I think Lilly with GLP-1, I think this one's fine. It's trading sideways. You're going to get a leg higher in that one. Meta, I've been screaming about Meta since 120. There's no reason not to buy Meta. MPLX, 9% dividend, and your base is going to be about $40. That's fantastic. Do you think this one's going down? Hell no. This one's going to get another leg up. Oil is going higher. Microsoft, just buy it. Netflix, it's going to be an $800 stock. I think its all-time high was 700 something. If we go to a weekly and we look at this one, look, you still got room. $700.99. You still got room. They're still cracking down. Nvidia's up 1%. I mean, again, there are plenty of opportunities in this market. Look at Uber. It's up 1.32%. Robo-taxis ain't coming anytime soon. If they do, Uber's going to win in this. Uber's going to buy a shit ton of robo-taxis. They're going to they're going to license full self-driving from Tesla. They're going to license something from Waymo. They'll get rid of their drivers. They'll make a ton of money. United Health, rumors about insider trading at United Health. I think United Health is fine. I think United Health is going to be a $500 stock. I'm not buying it until it's probably got some type of upward movement. I pointed out this 450 was going to be a support level. We're down below it. Where is it now? Your support level is probably, look, 1, 2, 3, 4. You want to buy it? I mean, again, we're going back to October of 2021. I think that's fine. United Health is perfect right there. XLK, I think, is going to be one of the leaders. Exxon, again, the core portfolio. Go over to Seeking Out or Savvy Trader, and you can see my portfolio. My portfolio, free to follow, is the Daily Stock Pick core portfolio. This one's great. Again, if you want to compare it, my qualifications. Here's the comparison. What are you up? In 1 year. Up 30% on the core portfolio. NASDAQ up 19%. This is just an equal weighted portfolio. This is nothing more. It's 35 names. If you want to trade them, they're in there. So, okay, I'm out. I'm going to watch the Masters. Take care. See you. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.